Good evening, Strategic Alpha community members, Conviction Club members. I welcome you all for yet another weekly Community Connect. And we are going to discuss in this today's session. The main topic for today's discussion is the fresh round of money printing. Is it going to start? More money printing ahead? And are we going to see a rally again in the hard assets ahead? So that is the topic of today. So without wasting much time, let us move forward. So hope everyone is able to see the screen and able to hear my voice properly. So let us move forward with the topic. So I've said this on 23rd of October 2025 on my Twitter handle that money printing is a organized loot and a tool to transfer wealth from ignorant or innocent citizens to people holding hard assets. And if you want to remain rich, if you want to remain wealthy, if you don't want to stay poor, you have to learn about it, how money printing is affecting and it is creating a wealth shift from ignorant people to the people who are holding assets, hard assets in terms of it might be gold, it might be silver, it might be Bitcoin, it might be real estate, it might be commodities. So the people who are holding hard assets are the people who are winning this money printing game. And especially most of the smart people are able to guess this money printing and are position themselves well and they are benefiting at the cost of ignorant common person. And I also mentioned that explosive money printing on the way ahead. Why did I say that? If you go through the tweets, if you go through the news just go through any source like Bloomberg and all, there is a concept called as two concepts. One is quantitative tightening and there is quantitative easing. So what quantitative tightening means is reduction in the money supply. And what quantitative easing means increasing total money supply. And money supply is nothing but some part of it is fresh money printing. And if you have not gone through my session on commodity bull run, do go through that. Also during the Bitcoin super session, we have discussed about money printing and how this cruel thing has been done by US, not only US, many of the global Federal Reserve, means central bankers. So, and I've said this that this is like a organized loot, which a common person doesn't understand. So, the recent news came regarding end of quantitative tightening. For past 2.5 years, US went into quantitative tightening because the amount of which money which was printed after COVID, you must have heard that most of the US citizens got checks, free checks. It was free money. And where that free money comes from? That is all money printed. So the money printed, fresh money printed during the COVID crisis was distributed among the citizens. And that is when the money printing started fresh. Although money printing has been done over the past 37 years, it is not new, 37 to 38 years. But the acceleration at which the money is getting printed has increased in the recent years. So high level of money printing happened after the COVID to solve the crisis. But at some point of time, because the inflation went up to the roof, because what happens is whenever you start printing excess money than needed, there is explosive inflation which comes. So the explosive inflation happened across all the commodities, essential commodities, also industrial commodities, because whenever the excess money print gets printed, It creates more demand, unnecessary demand. And if it is creating that unnecessary demand more than the required, it will increase the prices because there is a competition. And that is what created inflation in US. In fact, usually the inflation in US is less than India, but this time after COVID, the inflation in US also touched 8 to 9%, and India never saw that kind of inflation this time. So the amount of money which was printed was at unprecedented levels, and because of that we have seen that asset bubble happening across asset classes. Most of the people who have come to the markets after 2020, who think that they have made money from stock market, I'll give you a reality check today. If you have made money in stock market in past 5 years, and after that reality check, it will be a eye opener whether have you really made the money or it is just the illusion of making money. So I'll be discussing about that. So this is US M2 money supply. Just this chart is available. This is total money supply by US. Just look at this is total money printing. So the total money printed just after the COVID went from $15 trillion to around $22 trillion, which means around $78 trillion was printed in no time. And that was the reason why stock markets saw a V-shaped recovery. Globally, we have seen that V-shaped recovery happened. And why did that happen? Because whenever there is excessive money printing, and when US distributed free money to the citizens, some of the citizens also invested that into stock market. We have heard the stories that many of the people invested that into stock market. Some people also invested in gold, some people also invested in silver. Wherever they feel safety, the money went into there, and that created explosive bull run after COVID. Because when US prints money, and it is not just US, look at Japan, look at China, look at even India, the money printing for most of the countries happened because the crisis was of such levels. So the after that kind of money printing which happened across the globe, I'm just showing here USM2 money supply. You can also check for other money supply. The amount of money supply which was available, and that created inflation across all asset classes. And you must have seen that real estate also went up, Bitcoin also went up, gold also went up, silver went up, stock markets went up. And when most of the assets go up, it is not that people think that they have become rich, but they are not becoming rich. Because if everyone is becoming rich, then you are not becoming rich. Because if the whole world, because people who invested in real estate, they also made money. People who invested in stock market, they also made money. People who invested on in Bitcoin, they also made money. So what it means is, on a absolute basis everyone made money, but on a relative basis no one made actually money. That's the reality. On a relative basis, very few people actually made money. Who The people who created alpha more than others, they would have made money. But on a relative basis, very few people made money, because it is just the illusion of you making money. Because if you compare that with money supply which was happened across the globe, you have actually not made money. Not you, most of the participants including me. So unless and until one has outperformed the assets in US M2 or global M2, one cannot say that they have made money in past 5 years, because everyone has made money. So after this 2022 until 2022, the money supply went up. But after that, there was a collapse in money supply and quantitative. This is called as quantitative easing, QE, when the money printing happens. But after that, there was QT, which is called as quantitative tightening. which created a tight supply of money, and because of which you must have seen that most of the commodity prices fell that point of time. uh, and also the commodity stocks also fell big time. Like for example, I was tracking sale during that time. Sale fell down from 145 to 50 in 2021 to around 65 rupees. So most of the commodity stocks also fell down because of this quantitative tightening. Because in the absence of money supply, the asset prices will reset themselves. So that is what happened. But recently, government means Federal Reserve has indicated that they will end the quantitative tightening. And if we see on charts, it is meant that there was a quantitative tightening. The level of printing money was not high as earlier, and it was quantitative tightening because the money supply has to be there even at a slower pace. But there was a quantitative tightening period, and recently they have indicated that they might end QT. And it is not just that the big end of QT is also means that the start of QE, which is fresh money printing. That is what is the possibility, because what is happening is recently, without much of money printing, some of the commodities and gold, silver, most of the other industrial commodities also went up. Now government also has brought down the inflation, and they think that the rate cuts are also will be happening, and along with that they think that they have brought the inflation back in check, and there is no need of QT anymore, and QE can be started. Because most of the problems which they are having, just go through the video on commodity bull run session. I have explained there why quantitative easing is needed, because they think that they are solving the problem, but they are not solving any problem. It is just that the balloon is getting bigger and bigger and bigger. And so just understand right now is that the new money printing shall soon starts. I'm just asking this question: new QE begins? That is what the overall development says. Now what happens is, whenever the money gets printed, yeah, the prime reason for the start of QE is due to fall in total reserve of the bank to GDP. So see the recent troubles which US banks are facing, and because of which quantitative easing they have to do it. So see what happens is, whenever there is a quantitative easing, some of the asset classes do extremely very well, and there has been lags, and there has been leads. Sometimes just after the money printing, the asset immediately doesn't go up. Sometimes it lags, sometimes it leads. And the safest asset class for the excess money printing is gold. So whenever the money printing happens, the gold surges like anything. In past 18 months, we have seen what gold has done. But the thing is, at this point of time, we have discussed that gold is at a stage where asset allocation check is needed, and you cannot be overboard on gold at this point of time. It is okay if you are owning physical gold. If you are owning gold through ETFs, gold through digital gold, it is better to look at your asset allocation. That is what I said, because the average cost of mining gold, all in sustainable cost, sustaining cost, AISC, is around 1700 USD, and gold is now trading at around 4200 USD, which means it is nearly trading at 200% premium than the production cost or mining cost. Now, silver, which has a production cost at around 27 to 28 USD, just 1 year back, it was trading at nearly 1.1 times or 1.2 times of cost of mining the silver, which was at that point of time, I would say that gold and silver, gold even at 2200 USD was extremely cheap because it was trading at 1.4 times the mining cost. Silver was also trading at 1.2 times the mining cost. So they both are now trading at a premium, which means, and even though there is a excess money which is available, they don't go blindly, because money always flows to a place where there is maximum amount of safety and there is a surety of a return. Even if it is not a surety of return, that is okay, but people, excess money printed also wants the downside protection from a safety point of view. So I posted this tweet on Twitter that Bitcoin is trading near cost of mining a new Bitcoin. Many of you might not be knowing that Bitcoin is more harder asset than gold, and might not accept it, but if you go through the concept of Bitcoin, you'll understand the Bitcoin is one of the hardest money, and it is more harder than even gold. And why I'm saying so, I'll just take you through that note, but let me talk about it. That everyone shouting Bitcoin is in a bubble, especially gold bugs and mainstream pundit who still think that gold is fairly valued. But let us look at the numbers instead of narratives. All in mining cost for Bitcoin is around 1 lakh 5,000 USD. Current Bitcoin price is around 1 lakh 10,000 USD. It is trading near the cost of production and it is hardly a bubble. And gold, which has all in mining cost at around 1,700 USD, when I posted this tweet, gold was trading at 4,300 USD, which means gold is trading at 200% premium over production cost. I will not say that gold is in a bubble, because uh, gold is such a asset class, you cannot say it as a bubble. So I will not say gold is it a bubble, but it is priced for perfection. And the irony is the people who are calling Bitcoin as a bubble are sitting on an asset which is trading at far above its cost curve. I'll not say this gold as a bubble, but it is an asset which is not undervalued. It is priced for perfection. It's not the Bitcoin which is euphoric, because many people have said saying that Bitcoin can go to zero. People who, without understanding what Bitcoin is, I've seen people talking about that. It's not the Bitcoin which is euphoric. It's the gold which is priced for perfection. And I will not dare to call it as a bubble, because it is the safest haven. And we have discussed that why it is the safest haven in the commodity bull run session. But asset allocation check is needed at this point of time. And why I am saying that Bitcoin is the hardest money ever invented. So I'm just sharing the screen with you all. So Bitcoin, the hardest money for upcoming QE tsunami era. About the asset, I've discussed about it that tsunami of flows is getting ready, and the quantitative easing is that tsunami era. So about the asset, Bitcoin is the first truly scarce digital asset, a centralized borderless monetary network governed by math and not men. Because dollars can be printed by governments. It represents once in a history convergence of monetary soundness and technologically superiority. Whoever has not understood Bitcoin, I would say that do go through our Bitcoin super session available on YouTube. You shall understand. So, and it is Bitcoin which cannot be mined further after some point, because the total number of Bitcoin which can be mined is just 21 million coins, and it cannot be inflated or it cannot be replicated. The ownership, no one owns Bitcoin. It is censorship resistant, portable, self custodied, and permissionless. You don't need government permission. Network secured by global decentralized mining network, consumer verifiable proof of work of energy. And while Fed can print infinite dollars, nobody, not governments, not the corporations, and not even the miners can print more Bitcoin. So Bitcoin is more, it has more characteristics of a perfect global reserve asset than gold, because you cannot transport gold. Just if you want to transport a gold, let us say 1000 crores of money into gold, it will have huge logistics which you have to do for the gold. But if you want to transfer 1000 crore worth of Bitcoin, you can do it over the internet without any logistical cost or any logistical headaches. You cannot cut gold into smaller pieces, but Bitcoin can be divided up to 8 decimal places, which means you can even send $100, which is not possible with gold. So it is arguably a better asset, better currency. And in fact, Bitcoin is not a currency. Bitcoin is a commodity. As per US government, as per US commodity, what we say, commodity agency, regulatory agency, Bitcoin is named as a, a commodity and not a currency. So let us look at the numbers, the latest. Current market price of Bitcoin is 1,10,000. All in mining cost is around 1,05,000 per Bitcoin. All time high is around 1,24,000. Market cap is around $2.2 trillion. Compared to that, gold has a total market cap of $25 trillion. So gold is like a large cap. I already said about it, but Bitcoin is like a small cap. And because Bitcoin it is a small cap, it will always be volatile. Just like in 1990, gold was also volatile, but its volatility get has got reduced as more and more people are started using gold as a collateral, as a source of storage of value, and more the participation, less the volatility. So as Bitcoin is emerging commodity, emerging currency, you can say, uh, in future the volatility might reduce. So today the total market cap of Bitcoin is around 2.2 trillion. Total money in circulation, it is around 19.7 million Bitcoin. The total Bitcoin which can be mined is around 21. So beyond that, more supply cannot come. In fact, there is a shortage of supply which might come, because if you forget Bitcoin wallet and if you forget the password, your Bitcoin is completely gone. So there is shortages which is coming, which can make the price higher. So Bitcoin is trading at just 5% premium over production mining cost. Gold is trading at around 200% premium on mining cost. Gold is priced for perfection. The QE tsunami setup. So Bitcoin is fundamentally fairly valued and gold is priced for perfection. Powell has signaled that the Fed may end balance sheet contraction in coming months, the precursor to fresh liquidity, which is QE. When liquidity turns, hard asset lead, and Bitcoin is the hardest asset of all the asset classes. Because what will happen at this point of time going ahead is, because gold is, even though gold is the safest haven, there is less alpha for anyone who is owning gold. I'll not say that money will not flow to gold. Money will flow to gold, silver, all the hard assets, including Bitcoin. But there is enough money which will be available for Bitcoin, which is lagging in this curve, because at this point of time, the amount of which money has got printed, Bitcoin would have been now trading at 1,70,000 or 1,80,000 already. But in this entire game of things where the money shifted first to safe haven, Bitcoin lagged the entire money printing. And if fresh money printing starts, which means the earlier lag it has to cover first, and then the new lag which will be created in the first at a later stage. So Bitcoin is at a place where asymmetric opportunity can get arised because of fair value valuation and the upside potential which it has. The gold first theory, US appears to be letting gold reprice first its balance sheet and lure BRICS into a gold trap. You must be knowing that US has the largest amount of gold reserves in the world. So even if gold goes up, they will be the most they will be the country which will be the most benefited country. So once credibility returns, a pivot to Bitcoin could follow. So whenever the quantitative easing happens, maybe the money will flow first again to gold and silver, maybe, but later on it has to flow to Bitcoin because it is a small cap which is lagging in this entire curve. So and if you know that the total debt which US has, that is $35 trillion, that $35 trillion debt can be easy, that problem can be easily solved with the gold itself which they have. Which means if gold goes up like let us say 2 3x in 3 4 years from here, their problems are already solved. And the stable coins, do research about it. The stable coins fund the present and the Bitcoin secures the future. So that way, US has a foolproof plan for this entire thing. Whether they will be successful or not, it's a different question. But gold repairs the past, stable coins fund the present, and Bitcoin secures the future. I just posted about one tweet on Conviction Club. Do go through that tweet when Russian official is saying that exactly what I have been saying about. So, legal clarity, Bitcoin is a commodity. US Commodity Futures Trading Commission explicitly classifies Bitcoin as a commodity under Commodity Exchange Act. Virtual currencies such as Bitcoin has been determined to be commodities under Commodities Exchange Act. Now let us look at Bitcoin. Why I'm saying it is more harder asset than even gold. So from Ukraine to Gaza, citizens lost access to bank, gold, and real estate. But those having Bitcoin needed only 24 keyword seed phrase to rebuild the life abroad. Bitcoin remains the only asset that crosses border invisibly. No permission, no paperwork, no logistics. And that is the reason why I'm saying it is more harder than gold. So, what are the positives for the Bitcoin? Absolute scarcity, portability, divisibility, self custody, network effect, debt hedge, and legal recognition. It is a commodity. Negatives, there is a high volatility. So don't expect it to be like gold. It is always be volatile. Regulative clampdowns for tax surveillance attempts. So you might have seen that India also has a huge taxes on Bitcoin. So that is one negative. Custody errors. So if you are owning your Bitcoin in a bad place, there is a permanent loss of capital. Price management to control macro narratives, ESG narratives. So my view is Bitcoin is trading near production cost and it's a rare setup, compression before expansion. So macro signal point to renewed liquidity. So this is what my reading is, and I'm having this for my own, that I'm having a tactical view on Bitcoin, which I'll be reviewing in Jan 2026. So this was all about Bitcoin and Bitcoin as a asymmetric opportunity of the QE decade. The hard asset bond for the world of monetary access. At 110K, it is near production cost. Gold repairs the old system, Bitcoin builds the new one. So that is what is all about money printing and how it can reshape the uh, reshape the asset classes going forward. So, although, as I said, that I'm not a investor, means I'm not a fan of gold at this point of time. I was a big fan of gold 18 months back. You all must have seen. But in the recent times, the asset allocation itself is suggesting, and I've moved my gold. In fact, gold miners, gold moved my most of the gold miners to Bitcoin. So. So Bitcoin, this is Bitcoin versus gold ratio chart. At this point of time, one should go slow on Bitcoin. Whenever this ratio breaks above this 38 range, that is the time when the adoption as Bitcoin compared to gold will happen at a faster stage. As of now, Bitcoin is underperforming gold, and that is the reason why I'm saying that there's a opportunity at this point of time because Bitcoin is trading at a cost of production level, and it has not performed in this entire QE what has happened. So if I look at this point of time where if you believe in Bitcoin, because you'll look at Bitcoin only when you believe in Bitcoin, and if you don't believe in Bitcoin, there is no point. And if for you to believe in Bitcoin, the entire research on Bitcoin is already available on school on YouTube channel. You can go through that. So whenever this ratio crosses above this line, which means Bitcoin will be outperforming gold, which it happened earlier also. Just after COVID, when the fresh money printed started, Bitcoin ruled gold because the returns made by Bitcoin was higher than the gold. Because this is a ratio chart, which means if the numerator is going up, which means Bitcoin is outperforming the gold. So at this point of time, if QT will be stopped and if QE will be started, can this Bitcoin to gold ratio breaks this 38 range? That will be the point of inflection where one can own lot of Bitcoin. At this point of time, I can start owning Bitcoin, but at this point of time, I can own more of Bitcoin. Now, one illusion about most people have that most of the people have made money in past 5 years. And let me just clear that illusion. If you have invested in mutual funds, I'm not talking about uh, self investing where one can create more alpha than the mutual fund itself. If you have invested in mutual funds and making 12, 13, 14% kind of a return or 15% kind of a return, you have actually not made any money. People think that the inflation is around 5, 6%, but in reality, count that with money printing, the total inflation is not 5, 6% what government says. It is upwards 12 to 13%. And why I'm saying so? Because most of the people think that gold ka price ऊपर गया है. It is not that the gold ka price ऊपर गया है. It is that thing that dollar has gone down and gold is appearing to be going up. So it is not that gold is going up. People have lost faith in dollar, and that is the reason why gold you are seeing that gold is going up. So if you look at returns made by stock market in gold terms, because gold is a true asset which can protect you from the excess money printing and also inflation. So if I look the Sensex in gold terms, means how much Sensex you can buy in 1 gram of gold. That is a simple formula. So if you look at this ratio from COVID to till date, the ratio at some point of time, the Sensex in gold terms, you actually made money, but in past 3 years, you're not made any money. Exactly, which means if you're just invested in markets and not owned gold, you're actually not made any money. So Sensex in gold terms is at the same place where it was in COVID. So it is just the illusion in past 5 years. If somebody thinks that I have made money from stock market, you have not made any money. That is what the reality is. It is not that it is we have not made any money unless and until you have made, one has made like 25, 30% or 40% CAGR. One has not actually made money in past 5 years. If he has made like 12, 13%, because this is Sensex in gold terms. Now, I also posted about it on Twitter. 100 years of major commodity bull runs, and all this commodity bull run is the thesis which we have explained in the commodity bull run session. This time, the commodity bull run is all about money printing and global power shift happening. And this global power shift has led to this commodity super cycle. And this is 100 years of major commodity bull runs from 1915 to 2025. In 1920, there was a 6 year of commodity bull run post World War One. In just after World War Two, there was a 9 year commodity bull run. Then there was sorry, the yeah 9 years, 8 or 9 years of commodity bull run. So from 1970 to 1980, again there was a 10 year of commodity bull run, inflationary super cycle. Then there was a 10 year of super cycle, commodity super cycle from 2003, 2001 to 2010. And once again, the current commodity bull run, which has started post COVID. And I think the 50% of the journey of commodity bull run has already completed since COVID. And we have discussed in commodity bull run session that we are in a commodity bull run at least till 2028 or 2029, which means if I do this average, you'll get to understand that at least the commodity bull runs last for 8 years. And if I take that from 2020, which means commodity bull run, we are in a commodity bull run till 2028, 2029. And that is the reason why in the precious metal bull run, we have discussed that why we are in a precious metal bull run at least till 2028. There are more pointers, you can go through that. Now, what has happened is gold has moved too much too fast in shorter period of time, because there is gold. See, there is a commodity bull run, but even a commodity bull run will have a part and parcel of corrections in between. It is not going to be one straight line. So there is a gap 121K, and already people are seeing that there is a safety some in some other asset, something like Bitcoin or so. There will be some people who will be thinking that let me book profit in gold and silver. That is the time to do aggressive SIPs. So if that happens, that will be the strategic point where aggressive SIP can be done for the period of 12 weeks and can sit tight till the commodity bull run ends, maybe 28, 29. So that was all about money printing. That was all about precious metals, gold, hard assets. Now let us come down to financial assets, which is stock markets. So what's up with Indian markets? So in the previous sessions, we had discussed about it that the melt up had started, and the melt up might continue for 90 to 100 days. And the thesis for melt up was also the money printing, because after hard assets, the money also flows into the soft assets like financial assets and stock market. It also enters into stock market, and that is the reason why this entire blow off thesis was designed, because other pointers were also saying the same. But as I said that it is not going to be going in the straight line. And as of now, what we saw a rally, because even before this rally started, I talked about it that market might bottom out, and the markets have in fact gone up 6% in just 3 weeks of time. But what has happened is after the yesterday's news about trade deal with US, the markets didn't sustain. And actually, there was this point which could have given more confidence for us about the rapid bull run. As of now, the confidence has not yet broken as long as we are above this 30-week moving average line. But at least it might go once again into consolidation phase, and there is a pause in the momentum which was there. So this is actually a rejection. If you see here from this point, if we have got this breakout above this, because I said about tsunami of foreign funds which might come only after Nifty in dollar terms crosses the new lifetime high, and that has not yet happened. But there were clear signs from Indian markets that Indian markets might do start first. But this week there has been a pause. I'll not say there is a stop, but there is a pause. But so again, market might go into consolidation phase for some point of time, or it might also, if any news, big news comes next week about trade deal, immediately market might even cross. So unless this market crosses this level, one should not initiate any fresh positions, because what happens is this is not for old, because whatever someone is holding old, it can continue to do well, especially the pockets like metals, PSU bank, and capital market stocks, which we have discussed. Stock specific and theme specific will continue to do well, but broader market bull run, which would have started, it has taken a pause as of now. So this is the chart. So if it breaks out from here, Nifty can reach to this melt up. We can see a melt up whenever the Nifty breaks out of this zone. As of now, there is a pause. I'll not say there is a stop, but there is a pause. One key level for mid and small cap, I've been repeatedly saying about it. Do not expect big bull run in mid and small cap unless and until the index crosses 20,772 on weekly closing basis. And whenever the Nifty mid and small cap 400 index closes above this 20,772 on weekly closing basis, that is the time melt up can start in small and mid caps. But until then, the consolidation might continue. And I said that in the last session, large cap is the best place to be, financials is the best place to be, PSU bank, capital markets, and metals are the best place to be, where they are leading the market. Even though the market might go into consolidation, they might still do good. But Nifty mid and small cap is not in its best situation as of now. Also, we had discussed about turmeric in the last to last session also. And since then, commodity bull run has also started in turmeric. And we discussed that case in Conviction Club. And so, has the bull run started in turmeric? You can research about it. I'm owning turmeric already, so I might be biased. So, you can research about it, because after I've discussed it in commodity bull run session. The first commodity bull run enters into precious metals, then it enters into industrials, then it also enters into agri commodities. So agri commodities is the last phase where commodity bull run can start. And has it started in turmeric? That is a research which you can do. One more thing which was most important, at not at this point of time, but I've been talking about it because the excessive money printing which has happened at some point of time, because there is a asset bubble happening across all asset classes, it will affect all asset classes, including gold, silver, Indian markets, US markets, because the most affected markets which might get impacted will be US markets, because US markets is 25% of global GDP, but 78% of global market cap. So it is already in the bubble. Most of the AI stocks and all, they're already in the bubble. And there is Parimal Ade who posted this tweet. I'll just share you the tweet with you. So this is Geeta Gopinath who shared this tweet, who had shared this thing. Geeta Gopinath warned about $35 trillion of global crash and what it could mean for gold. Geeta Gopinath recently warned about equity correction of a dot-com scale that could erase $35 trillion in global wealth. If such a shock unfolds, the reaction in gold markets one of the most critical stories to watch. How it could play out, short-term turbulence. In initial panic, gold can see a temporarily sell-off as investors raise cash to margin calls. So this is what happens because whenever people get margin calls on equities, they have to sell their most beloved asset, and it can be also gold, and that triggers a sell off in gold. So even though gold is the safest asset class, such things can create panic in gold, short term panic. And this happened in 2008 and March 2020. If you are aware, because of COVID, gold also dropped 20 or 22% in short period of time. So flight to safety, as the fear settles and recession's expectations rise, capital typically moves into gold and treasuries. Falling interest rates and falling easing drive a sharp rally in gold prices. Dollar dynamics. Gopinath cautions that the dollar may not strengthen in the next crisis as it has done in the past ones. The weaker dollar could amplify gold's upside, especially in emerging market currencies. So, in Indian terms, if that happens, the gold will give more return in Indian terms than US terms. Structural re-rating. With limited fiscal and monetary policy globally, prolonged low real yields and central bank purchases could anchor prices at long-term range, higher range. For Indian investors, the implications are clear. The global commodity crash would likely weaken the rupee, boosting gold's value in domestic terms. Gold funds or ETF could serve as a effective hedges in such scenario. In short, $35 trillion gold wealth shock could be destructive for equities, but are potentially transformative for gold strategic roles in the portfolios. So this was the tweet which they made, and it is true for gold and it is true for Bitcoin also. So whenever that bubble burst, the bubble burst will be happening across the asset classes. Gold because of margins calls and because of price to perfection, as I said. No asset class is evergreen. Even gold is not evergreen. Understand that. We have seen gold falling down 20-25% in past. So, and I posted about it that start thinking about this global crash, but not on an immediate basis. Before that, blow off top in equity should happen. Because if you've seen 2008, before the bubble burst, the blow off top in equities should happen. And I'm positive on Indian equities for next 3-4 months. We'll reassess the situation in mid December. That is what I said. And I'm actively reading about it, and you also should actively read about it. What can go wrong in the world, and what will the trouble will not be Indian. The trouble will be coming from US markets where there is heightened bubble happened, and the trouble will be coming from banks. I won't be surprised that uh, that some of the known banking names file for bankruptcy in US. Just like Silicon Valley happened, similar type of that can happen in US. And the I'm saying about the asset bubble burst across asset classes, and that I mean for real estate also. So that is that is not immediate, but I think that one should start thinking about it. So one more thing I posted about is one of the commodity which is not in a bull run is crude oil, and I've been attempting it by trading multiple times in past 8 months. Sometimes I got stopped out at cost, sometimes I made money, and I'm attempting it. And just 2 days back, I bought crude, and which I mentioned in the last weekly session also. Crude is relatively heavily underpriced, And there might be some news which might come which can create a short covering rally, not a bull run, but all bull runs are first started by a speculative move and later on the fundamental changes happens. So similarly, I was seeing that in crude and built some positions in crude. The reason for that was India, my thesis was very simple that if India stops buying Russian oil, it can create upward momentum in crude because India is the reason why crude is low globally. If India stops buying Russian oil, it can create a 5 to 10% kind of a up move in crude. And that news, whenever it hit, along with some other developments, crude went up 5% in a single day. And today also it is firmed. Now the news is coming that Chinese state oil majors suspend seaborne Russian oil purchases due to concerns about Western sanctions, sources say. So I said about it. As of now, think about thing can be speculative, but it is food for thought. Just think what can happen to crude if India and China both stops buying from Russia. And if India and China both stops buying Russian oil, Russia would lose 70% of its export market overnight, causing a short-term oversupply which can make crude fall in short term in a knee-jerk reaction, but within weeks, Russia will be forced to cut production supply, tightening the supply. Brent could then rebound to 100 to $120 as market rebalance. Global inflation and import cost would spike, especially in India and China. Overall, it can trigger extreme volatility. First, the glut on the downside, then the supply shock triggering the upside. So, this is my speculative thesis. I'm not saying that this is a perfect thesis. Someone in the on my YouTube channel, someone commented that your thesis is wrong. I might be wrong. It might not be a flawless thesis which I'm thinking, but this is how I'm thinking about crude at this point of time. And let me just repeat that I'm already owning crude, sitting on 5% gains on crude. So this was all about crude. And if this week crude closes above this 6150, it will signal a reversal in crude because it will be a bullish engulfing pattern. It will be engulfing two candles, previous candles, and it will be a bullish engulfing pattern which can be a reversal point for crude. And if crude goes up once again, it can be a trouble for India at some point of time if crude grows up 25, 30, or 40%. So that becomes a key monitorable for Indian investors. Now let us look at one word of wisdom which I'll be sharing is people who call trading gambling don't realize that it is actually a profession that tests every part of you. Your IQ drives analysis, your emotional intelligence keeps you calm under pressure, and your adversity quotient helps you to bounce back from losses. When a field demands all three at once, of course, it is difficult and naturally it takes immense effort to master. So, don't think traders as gamblers. Traders need this all qualities to be successful. So this was all about this week's weekly community connect. If you like this, don't forget to like, share, and subscribe to the YouTube channel. Don't forget to follow us on our social media handles for the dose of knowledge, wisdom, and ideas. We are available on Facebook, YouTube, Instagram, and Twitter. My Twitter handle is Suyog_Dhawan. I'll be soon taking next month Techno Value Investing workshop. Do register for that workshop where we'll be talking about FTVT analysis, whatever you are learning now. So with this, I conclude that this week's weekly community connect has came to an end. And if you have any questions, please raise your hand. I'll be taking 5 questions.